Hello traders, Gary Wagner here. It is 1 o'clock in Honolulu, 6 o'clock in New York on Thursday, 25th day of January, 2024, and this is our evening report. Traders, gold did have moderate gains today, resulting in a net gain of $6.60 in trading in New York. Gold opened at $2,014.80, traded to a low, and the low is important as it did go through our stop at 2004, closing today at 2021. Currently, it is back open in Globex overseas, trading at $2,020.20. Traders, as I said during pricing, it was the low that concerned me the most today. When gold traded intraday to 2004, we entered the market last week at 2024. We put a very tight stop in it at 2005 to minimize our risk on this last trade. The actual hour in which gold did stop out our trade occurred 8 o'clock Eastern Time in New York. That is this candle with an exaggerated low and exaggerated high. During this hour, gold traded to a high of approximately 2023 and this low at 2004. Traders took the market to extreme ranges during the hour of 8 o'clock when the report was released by the Commerce Department. You can see that this low at 2004 comes in well below any of the lows that have occurred recently, and unfortunately, it did force our trade to be closed out at a loss of $19 per ounce. Although the stop was hit on a wick, meaning the differential between the opening price and the low of the day, we could see that we had potential to get in trouble when yesterday's activity opened at the 50-day moving average and resulted in gold closing well below its 50-day moving average. While it is still showing a solid support above 2,000, we will want to see what the inflation report tomorrow reveals, but most importantly, the FOMC meeting, which will occur next week, starting on Tuesday and concluding on Wednesday, which is possibly one of the most important economic events that will occur this month, because market participants and investors at large will hope to hear something from the Fed that addresses the timing of upcoming rate cuts, the last piece of the puzzle by the Federal Reserve in terms of its pivot from a restrictive monetary policy to a series of rate cuts beginning this year. This is a Heikin Ashi chart. We'll go ahead and convert that to a standard candlestick chart. The dollar index gained 0.23% and is currently fixed at 103.517. There is an intrinsic negative correlation between dollar strength and gold and silver strength because of the fact that silver and gold are priced or paired against the U.S. dollar. Since the beginning of this year, we saw the dollar trade to a low of about 100.60, and from there gain about 3.5%. 103.517 is the current fix. We saw sideways trading action, a gap higher, and we are again moving in a sideways band. We don't have enough information, but on a technical basis, the next real level of resistance comes in at about 104.30. In terms of support, it is at 102.50. Silver had a strong showing in trading today, gaining 40 cents on the day and closing in New York at $22.92.5. It is trading overseas right now, and the current fix is $23.02.5. Yesterday, we did send out a trade alert to enter silver in the March futures contract. We got in at $22.79. We have a good till cancel stop at $22.14.5. And we are now looking at silver trading above $23 per ounce, which is significant to me because when we look at this daily chart, we can see an area where it was former support right at $23. I draw your attention to the activity that occurred in the middle of December, in which silver had traded to its high of the year, $26.33, came down to this bottom. It was a higher low, traded up, and then broke below that, having major support at approximately $22. I wanted to see how silver reacted at this particular price point before we took a stab at our next silver trade. We did pull the trigger yesterday because, as I said, on a candlestick pattern, we had a piercing line, an important key reversal pattern. We also saw that occur at an important Fibonacci level, and the combination of that allowed us to enter the trade. As I said, we're long at $22.79. Our stop is currently at $22.14. We will look to move that up below yesterday's candle, meaning to move our stop to approximately $22.50 over the next couple of days. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.